So that's about the budget. But, after the budget, this Friday, we had the RBI policy as well. The street was hoping for a 25 basis points rate cut. That's exactly what came by. What do you made of that?
The street was still not happy enough, right? They wanted a tax cut, they got it. They wanted a rate cut, they got it. But the market's still kind of ambling along. So what does it tell us? I mean, on the RBI policy, I kind of listed out actually 6, positives, which were there, but the market was still not happy enough. And I think largely because it was a ye dil mange more kind of a policy. You've got 25 basis points, but there was no immediate hint of further policy action. There was no sort of, barrage of dovish commentary that's telling you next cut is sure shot on its way, or, that there is a big liquidity bonanza that the RBI is handing out. However, here are the positives, and we should not lose sight of that. Number one, the fact that the decision was unanimous. So there's no discrepancy between the MPC members. All 6 voted in favor of a rate cut. Number 2, the governor is pointing sufficient liquidity support to the market as and when needed. Number 3, look at the inflation projections. For FY26, CPI inflation is projected at about 4.2%, which is so much better than 4.8. That's the revised estimate for FY25. Number 4, the GDP forecast at 6.7%, which is towards the higher end of the forecast that we had from the, from the economic survey, which the upper end of that band was 6.8%. So GDP forecast for FY26 not too bad. And last but not the least, the market's been very nervous about a couple of these regulatory changes that have been pending. LCR guidelines and, of course, implementation of ECL norms, project financing. What did the governor say? In clear terms, he said that all of this cannot be implemented in a rush. In fact, on LCR, he's made it very clear that it's not coming in till FY27, 31st of March 2026. It's not happening before that. And similarly, the others are more, a consultation process right now, which is the ECL norms. And again, that seems to be off for at least another 1 whole year. Yet the market was not pleased. Why? And now I come to the so-called negatives, and negatives in quotes. What do I mean by that? The stance, number 1, is still neutral. So if people expected a shift to accommodative, that didn't happen today, and there was no hint of that. And largely, from a stock market point of view, the immediate trigger, look at what the governor and the deputy governor have said on unsecured lendings and also risk weight to NBFCs. Remember, a lot of these stringent norms came in a couple of quarters back to sort of regulate the lending happening in the unsecured place. I just want to highlight these 2 quotes. What did the RBI governor say? The RBI governor went on to say that we're satisfied with the slowdown in unsecured loan growth as of now. The DG, Mr. Swaminathan, he said that we don't think there is any reason to review any measures on unsecured loans at this point in time. Doesn't get clearer than that. And even on NBFC lending, remember the risk weights had gone up. The loans that banks are giving to NBFCs. Is the RBI going to change that so quickly? I don't think so. If you go by the commentary, look at the RBI governor's statement, and I quote, "We've raised risk weights for bank lending to NBFCs due to concentration risks." So he's going into the reasons and why he still thinks, that was a valid move. So I guess this was a bit of the disappointment that played out.